In this presentation, we will continue on with our comprehensive problem. We will be performing work on account, meaning we'll be generating revenue by doing work for a service company. For more accounting information and accounting courses, visit our website at accountinginstruction.info. And not getting cash at this point in time, but having to track that information that people owe us money in accounts receivable. We'll enter this into our general journal. We will journalize the journal entry into the general journal, then post it to the general ledger, which is this item over here, which will then be used to create the trial balance and check out what happens in terms of the accounting equation and net income. So the date is the first thing we will have here. So the date is going to be on January 8th. And that should be pre-formatted for us, so we just type in 1-8. Then we're going to say that we did work on account. So if we go through our questions, the first question is cash affected? Answer, no. We did work, but we didn't get any money yet. We're going to get paid in the future. Then I usually think about, well, what did we get? We got something that seems kind of worthless at the beginning, or not very tangible. It's not tangible, and that's going to be an IOU, an accounts receivable. So accounts receivable note is our second favorite asset. It's still an asset because we expect it to be converted to cash within like 30 days. And so we're going to record the promise. We're going to record the IOU, just like if we had a loan or something. Like if we loaned someone money, we would record the fact that they owe us money. We did work, they owe us money. We're going to record the fact that they owe us money. It is an asset. It's not as tangible, not as good as cash. That's why it's not number one here. But it is still something that is of value, hopefully, depending on who we deal with in terms of clients. So it has a debit balance. We're going to make it go up by doing the same thing to it, another debit. So right-click and copy. We're going to put that up top in C19, right-click and paste, 1, 2, 3. The amount then will be, so we did work on account 12,000. Now the credit side then is going to be why are people going to pay us money? Because we did work. Whenever we do work, we earn revenue. We don't earn necessarily cash. Note, cash is a form of payment. That's not us earning something. We could get paid in equipment or something other format. We earned the revenue, which we hope to get paid probably with the use of cash. So revenue is an income statement account as opposed to the form of payment, which are going to be asset type accounts typically. So we have the revenue here. It's a credit balance account. Revenue is a credit balance. We're going to make it go up by doing the same thing to it, a credit. Notice credits on the income statement side, the dark blue side, are kind of good. And even you can even think of them good on all equity section. Whereas everything from assets and liabilities, kind of balance sheet side, the credits are kind of bad. Again, that doesn't have anything inherently to do with debits and credits. It's just how the board is set up, just the balancing equation. So point being, debits and credits are not inherently good or bad. Don't think in that format. You just got to remember which accounts are debits and credits. So we're going to right-click and copy the revenue or income. Put that in C20, right-click and paste. 1, 2, 3. Now I'm going to go ahead and indent this. It's probably indented for you already by going to the Home tab, Alignment, Increase Indenting. So it's a useful little item to know. And then we're going to be here in E20 where we're going to say, could put a negative 12,000. I like to put negative of that formula, or that cell, in order to use formulas as much as possible. And then enter, and there we have it. So now this is our general journal that we journalized in the general journal. This is our journal entry, which we journalized in the general journal, which we will now post to the general ledger on the right. So to do that, I'm going to freeze the panes. So once again, I'm going to go all the way to the top. I want to get rid of A. So I'm going to go to the right just a bit so that B is flush. Then put our cursor on F1. Then go to the View tab. And then the Windows, freeze panes, and freeze the pane. Then we're going to scroll back down. We're looking for that accounts receivable. Here it is on the general journal. Here it is on the trial balance. It's our second account. So here it is in column S, accounts receivable. So we want to pick up this 12,000. So we're going to be here in S9. S9, we're going to say equals. Scroll down just a bit, point to that 12,000, bringing the balance up from 0 by 12,000 to 12,000. If we go right to the left of this frozen panes and scroll right, it'll pop back over. We see that 12,000 here, and we see that we are out of balance here. So now we're going to post the other side to revenue. Here's revenue here. Here's revenue on the trial balance. Same, it's in order: assets, liability, equity, first income statement, first dark blue account. Same on the general ledger. So if we scroll to the right, here's an assets, here's liabilities, here's the equity, here's the revenue and expenses in dark blue. I'm going to scroll down a bit. There it is. Here's the one we want. So we want to be in F or AF 27, and that's going to be on the credit side. So we're on the credit side of the revenue, where we will say equals and point to that 12,000, bringing the zero balance up by 12,000 to 12,000. So then we're going to go right to the left of the frozen panes and scroll right, and it'll pop back over once again. There's our 12,000. So what has happened here? We're back in balance. That's nice. And we can see that the accounts receivable went up, meaning people owe us money. It is an asset. It's not cash, but it does have value. If we're going to report this to somebody else, they're going to want to know, do we have receivables? That's going to be useful to the reader of the financials, whether that be us or someone else. The other side is revenue went up, meaning we're claiming that we did work and have generated revenue, even though we haven't got the cash yet, because we want to record under the accrual method when we earned it, when we did the work. We want to report how much work we're doing here on the income statement side. So revenue is going up, so net income then, revenue minus expenses, is increasing. This doesn't represent negative a net loss. It represents negative for Excel. For purposes of debits and credits, it represents a credit. The credits minus the debits, the revenue minus the expenses, this being net income now of 12,000. Also note that as we're still in a fairly simplified format, if we use Excel, we can highlight, these are all our assets adding up to 128. Our liabilities are 16. If we highlight 128 and the 16, assets minus liabilities, debits minus the credit, we get 112,000. If we add up all of the equity, all the blue, which is all equity, we get the credit, 112,000. So note that this will always be in balance, and how easy it is with this format to be able to check what's going on. You know, what is owed to the owners? Well, we can say assets, liabilities, that's the value of the company, 112,000. Or the value of the company owed to the owners is what's in equity, and the income statement is part of equity when thinking of the equation, 112,000. That, in essence, is just what we have here. Here's the assets, here's the liabilities, here's the equity. It's just summing these up, and note how simple that is to do if we properly format our worksheet. For more accounting information and accounting courses, visit our website at accountinginstruction.info.